Well, the different faces of Christmas there put together by Will Ibon. Thank you for that, Will. And let's broaden that conversation now with Kelvin Emmanuel. He joins us from our Abuja studio, the Chief Executive Officer of Dairy Hills. Kelvin, good morning. And, well, compliments of the season. How did you spend your Christmas?
Good morning. Compliments of the season to you. Thank you so much for having me, and compliments of the season to all our viewers in Nigeria and around the world. Well, it was a quiet Christmas. Spent it at home because, you know, I needed rest and recreation after a very long year. So it was just low-key.
So if you wanted to do a comparison, 2023 Christmas and 2022, how would you weigh them? Last year, unfortunately, we have cash shortage again this year, but I might say it's not biting as hard as last year. And okay, by then we hadn't done the fuel subsidy removal and all of that. How would you compare both?
Well, you know, if you look at the comparison, if you look at the fact that food inflation 1 year ago was somewhere around 22.68%, and today it's at 32.8%. Food inflation is highest in Kogi and is lowest in Bauchi. And you look at the fact that the exchange rate has moved significantly, considering that the government failed at unifying the exchange rate. And then you had the whole revelations from the Central Bank of Nigeria. You had the deregulation of the price of PMS, and you know, you've seen the black market premiums go haywire, and that has significantly affected inflation. Because one of the major causes of the inflation you see today is actually the fact that other than food prices going up, the supply chain of Nigeria is exposed to the shocks in the foreign exchange markets. You know, and there are several reasons for that. You know, so I think it's a very, very horrible situation because a lot of Nigerians are struggling to eat, are struggling to afford the most basic things that they need, like food. You know, and food has, you know, really eaten into the share of what they spend on food has really eaten into their income. There are millions of Nigerians who earn less than 50,000 naira a month. And there are millions of Nigerians who, before payday, they're already in debt. So it's a very, very horrible situation. I wouldn't give the government credit. I wouldn't say they've done well, especially when you consider that the current president, the incumbent, inherited a very horrible situation. And in my assessment, I'll tell you, yeah, he deserves grace for, you know, a little time within which you want to assess his performance. But so far, Nigerians are not doing very well.
So if you were asked to review the year, the economy in the year, we've seen things like inflation, you mentioned the FX. We know how much the Naira was. It was about 400 plus at the beginning of the year. Obviously now it's about 1,000 or more in reality. We've seen inflation go from about 21% to 28%. We've seen food inflation hit more than 32% from, I think, about 20 at the beginning of the year. And then you look at the realities, and also putting it at the back of your mind that when you look around the world, it's not just Nigeria, it's not just the African countries that have experienced this inflation and a hike in interest rates and all of that. Do you think we could have done things differently?
You know, anytime the government comes and says that, oh, you know, the problems in Nigeria are not unique to Nigeria alone, I'm a bit befuddled. And the reason is because, listen, between January 2022, when Russia invaded Ukraine and the whole global supply chain went haywire, crude oil prices went to highs that we've not seen since the 14th of July 2008. And, you know, it was an opportunity for major oil-producing countries, major oil and gas producing countries to ramp up on FX revenue. Nigeria's food supply chain was shocked because the price of wheat went up, the price of fertilizer went up, given that it imports fertilizer components like muriate of potash, mostly from Eastern Europe. It's really not an excuse because at the peak of oil and gas prices around the world, LNG price went up to about $156 per standard cubic feet. Nigeria wasn't able to profit from it. Look, the NLNG annual report shows that there was force majeure because NLNG was unable to get feedstock where then we're operating on 67% capacity utilization as at the middle of the year, and they lost $7 billion in revenue of the 22 million metric tons that they have capacity to produce. And how do you explain that Nigeria is struggling to provide gas feedstock to NLNG? And that capacity, that feedstock provision is dropped below 50%. Capacity utilization has dropped below 50%. So how do you explain the fact, for example, that your gross external reserves are $34 billion and your net external reserves is negative minus $2 billion? And the FX market is where it is today. There is like a 35% black market premium because you just do not have the reserves, to sort out the outstanding FX forwards in full, even if CBN has started doing that. And, the perception of investors and traders has, created a huge gap. It's difficult for banks to open LCs for companies to import, which affects inflation. Nigeria is just coming around to the point where it's just going to begin to do backward integration for its energy basket. About 9 different products that forms its energy basket: lower, middle, and higher distillates. So I cannot exempt Nigeria and say, because of the global supply shocks. Now, crude oil prices are going up again because of the situation in the Red Sea, in the Gulf of Aden, between the Houthi rebels in Yemen and, tanks that take products and ships that take products all the way from Southeast Asia and the Middle East to Africa, to West Africa, to Europe, to Western Europe, and to North America. So if you consider the fact that, for example, the 2024 Appropriation Act, the proposal the president made was hinged on, I think, $77 per barrel and 750 naira to $1 as exchange rate benchmark. And the crude oil prices are going up. And I expect crude oil prices, if this situation in the Gulf of Aden continues in the Red Sea, the crude oil price might go up back to $90 a barrel. Why is Nigeria not benefiting from it? Nigeria is not benefiting from it because NNPC has obligations. It has forwards on debt it owes to traders, on crude oil stock. It's struggling to provide Dangote Refinery with enough crude oil feedstock it needs. The 4 million barrels that Dangote is going to get, he's gotten 2. He's going to get another 2 in the first 2 weeks of January. It's going to last him barely 11 days. And his board might have to resort to actually importing crude oil, heavy crude, which is cheaper, so that they don't have capacity utilization under 30%. How do you explain this situation to Nigerians? So it's not an excuse. The government does not have an excuse and say, the global supply shocks and the political instability in some parts of the world, especially the Middle East and Eastern Europe, is the reason why inflation is high. Inflation in the UK is dropping. Inflation in the US is dropping. Why is the inflation situation in Nigeria not responding to monetary tightening? The government doesn't have an excuse.
Well, I hear you, Kelvin, and I'm sure a lot of Nigerians would want to agree with you. But so we're not too partial. I mean, we also had this year that oil production went up maybe, I think, about 40% in the first couple of months that the president, President Bola Tinubu, took over power. So, I mean, I guess we can also, we also had the Port Harcourt Refinery also, even though we have been made to understand this is the first phase and it's the mechanical rehabilitation, so we still have a couple of months to wait before we can get products from that. But I guess we also have some things we could smile about in 2023.
Well, I'm not very optimistic about the Port Harcourt Refinery. And I've always advocated for the government to sell the refinery, because in my opinion, and like I've always said, the government has no business doing business. The government is supposed to be a regulator. The work of the government is to provide an enabling environment for the private sector to be able to thrive. The Port Harcourt Refinery, which was completed in 1989, 210,000 barrels by Shell and British Petroleum, has not been functional for decades, and actually has taken about 11.3 trillion naira in turnaround maintenance, which is enough money to build a new commercial size refinery of about 300,000 barrels per day processing capacity. My advice for the president is to sell the refinery, because if you look at the balance sheet of NNPC, the refinery takes about nearly 100 billion naira a year in terms of staff welfare cost and compensation on their balance sheet, the 4 refineries, which are moribund. And I don't think it makes sense for you to, have dead assets going into 2024, where the Ministry of Finance has hinted that it's possible NNPC might going into book building for initial public offering for an IPO. So, for me, it's not a thing to celebrate. I think the president is, succumbing to the labor union, and that they should not, one of the agreements they signed, that they should not, dispose of the private refinery, the Port Harcourt refinery and all the other ones, and then get it back on track. I think they should sell off those refineries and, support BUA to build his own refineries in Akwa Ibom, as well as a deep sea port that they plan to build. Allow the private sector people to play in that sector, and then focus on ensuring that they can provide enough crude oil feedstock to the refineries in line with the domestic crude oil supply obligations in the Petroleum Industry Act of 2021. In terms of, going into 2024, I would say President Tinubu inherited a very, very, very bad situation. Nigerians don't understand the depth of how bad things were, when he came into office in May of 2023. It's going to take a long time for him to attempt to turn the economy around because of the debt obligations. You can see in the Appropriation Act of 2024 that debt servicing has gone up to 8.1 trillion, which is about 94.8% of your capital expenditure. I heard the DG of Budget Office was talking about the debts that they intend to raise to finance the deficit in the budget, which is 48%. And he was saying that they actually have succeeded in renegotiating existing debt stock by about 1.7 trillion. And the question I have for him is how is he going to raise the other 8 trillion naira he intends to raise? And considering that the sinking fund, which is a fund set aside to pay debt outside of revenue, is somewhere around 68 billion naira of about 8.1 trillion. And considering that in 2025, the government has to pay Eurobond creditors, which constitute about 37% of the external debt stock, around $1.1 billion in yield, in servicing cost. So it's going to 2024. I don't see the silver lining yet. It's going to take a while for things to begin to turn around, and for the GDP growth rate, for example, to begin to come up above 30%, above the population growth rate annually. It's going to be a long ride. It's going to be a long ride for Nigerians. All right, Kevin, please just pause. Just do hold your thoughts. We do have a breaking news coming in.
This is Channels Television's breaking news.
It's a sad news this 27th day in the month of December, as we announce that the Ondo State Governor, Mr. Rotimi Akeredolu, has died after a battle with leukemia. Mr. Akeredolu died in Lagos, where he's been receiving treatment for some time now. He had returned to Nigeria in September following a 3-month medical leave in Germany, and only recently proceeded on another one, handing over to his deputy. We've been having this on the news. Mr. Ayedawa has been standing in as the acting governor, and now, unfortunately, the governor of Ondo State has passed on. All right, now we'll get back to the conversation we're having with Kelvin. Kelvin, unfortunately, we had to take that break to break out that story. But going on now, you were talking of 2024, and we've had a lot of projections. Talking about, for instance, our inflation. We've seen inflation tapering in the US, in the UK. Well, fortunately, it's not happening in Nigeria. But we've seen economists say that by the first quarter, towards the end of the first quarter, we should expect Nigeria's inflation to begin to taper. But, I mean, the question is, are we doing the right things that will lead to a tapering of inflation? Because you talked about the supply chain in Nigeria. We still have the issue of security, insecurity in the food chain. I mean, we've seen what happened in Plateau State, how more than 100 people were killed. When you check, these are rural areas where farming takes place. Now, if we don't have farmers going to the farms, we don't have farms that are secured, obviously this is going to affect the supply of food. And so I don't know how inflation is going to taper.
Well, thank you very much. First of all, I want to send my condolences to the family and the people of Ondo State on the passing of Chief Rotimi Akeredolu, and also to the people of Plateau State for the sad incident that happened in the wee hours of Christmas morning. My condolences to them. Now, you know, it's interesting you brought up this conversation, and the reason is because, you know, when I look at Nigeria, I think the conversations are usually around surface issues, and we don't like to tackle difficult problems. See, the real structural problems, solutions to these problems that we keep talking about every year and every cycle. For example, the issue of insecurity and how it affects the ability to produce food, and the fact that the president has included food in the National Security Council list as a national security concern, is the fact that, look, the CDS came out and said 50,000 soldiers are spread around Nigeria. The Nigerian Army's job is to protect Nigeria from external aggression, you know. It's not to maintain internal cohesion. That's the work of the Nigerian police force. Nigerian police force is underfunded and is understaffed, okay? It's grossly underfunded. And I've always said that, listen, if you want to tackle the issues that this country has, you have to focus on one word: decentralization. Nigerian police force decentralization. Now, I'm beginning to see that some people are really understanding the importance of having state policing, you know, of moving state policing from the exclusive legislative list to the concurrent legislative list. Because you can't have a situation where these things happen and the president orders the Nigerian army to move in. They are stretched across the country. They're in the Niger Delta fighting crude oil theft. They are in the northeast fighting Boko Haram bandits. They are in the northwest fighting bandits who have taken over mining territories and are causing issues. They are in the north central. You know, they are stretched. So it calls for the question of how do you provide checks and balances within the state, a state house of assembly, state judiciary, you know, to provide checks and balances to be sure that when you move policing from the exclusive to the concurrent legislative list, the governors will not take advantage of that and become, you know, lords over their states unevenly. How do you change the structure to ensure that that security votes they get, which is a military era construct, and use it as a counterparty fund to a security trust fund for the state, you know, will be like a financial buffer for the state governors to provide financing required for state policing in their states. These are the conversations we need to have. These are the conversations we need to tackle the insecurity you have around Nigeria that is a precursor to ensuring that farmers can go back to their farm. Now, on the economic side, you see, there are several structural issues we have to tackle from the roots, because we always like to tackle issues from the surface and then they come up again. Nigeria cannot continue with one state that has functional seaport. You have to decentralize seaport operations. You know, Calabar Seaport is not semi-functional because the channel draft is 6 meters and it needs 12 meters of channel draft. I need to dredge it, right? You have the Akwa Ibom Deep Seaport that is proposed, and it's at the stage where, you know, MSC bought off Bolori Logistics that won the concession to build the seaport, and have the concession for about 33 years. And, you know, MSC is evaluating if they want to continue with the concession or not. You know, nobody's talking about that seaport, you know. And then you have the on-air deep seaport that is designated as E&P, and that makes the port categorization not competitive with other seaports in Nigeria. And then you have, Nigeria Inland Waterways that was commissioned to dredge the River Niger and, do feasibility on whether it's possible to build a seaport in Lokoja to serve the 19 states in the north. Transportation cost is a huge factor. Extortion on the roads for the trucks that haul goods around Nigeria, food is a huge factor, and it contributes to food inflation. Diesel is also a huge factor. So if we tackle the fact that we need decentralized ports to reduce the cost of hauling goods from the states where you have seaports to the states where you don't have seaports, we tackle energy prices, convert trucks, haulage trucks to CNG, convert trucks to biodiesel, and then work on reducing the cost of diesel in Nigeria by refining your own diesel in Nigeria, you begin to see the energy impact on food prices begin to taper. These are the structural issues we need to tackle. Unfortunately, we don't like to focus on the meat of the issue. We like to run around circles, and then the problems come back. You have to focus on doing backward integration for the cost of fertilizer. Fertilizer prices went up from 7,000 naira per bag in 2019. It's close to 40,000 naira today. Why? Because the exchange rate has made it very expensive to import muriate of potash and phosphorus from Morocco and Eastern Europe and Canada. These are the issues we need to talk about. Unfortunately, I've not seen any plan by the current Minister of Agriculture to tackle the meat of the issues that is driving food inflation in Nigeria. And this is the reason why the inflation rate, which is 32.8% for food nationally, is not responding to monetary tightening.
All right, Kelvin. Well, obviously, we will keep talking about this, especially as the media. It's what we can do. We can bring these issues to the surface, because I am sure the minister knows these challenges that we are facing, and probably they know how to solve it. We'll get them to do it. Thank you so much for your time, Chief Executive Officer of Dairy Hills, Kelvin Emmanuel.
Thank you for having me.
All right, so 2024 is upon us, and these issues are still here, so we'll keep staying on them. But let's take a break now. When we come back, we'll look at the aviation sector in 2023. That's after the break right here on Business Morning.